All right, end of the week. So it's Friday session's about to start. Well, in an hour or so. So pretty punchy break to the upside, which of course everyone's talking about in the US markets. I'm still short. This the problem with trends lines like this is they can be very subjective, right? Particularly short-term ones like this. This one over long term, lots of signals for it to hold true. This one, just a few short-term. Anyway, needless to say, it is a break of a trend, but I'm a little bit cautious in that for a couple of reasons. First of all, the high, low, lower high, lower low. I'd call that's a lower high still. When you could say lower high, higher low, lower high, could say that. But really, the big test is it's got to break. It's got to break that one, right? That is the big mama. So if it breaks that one, right, then this, you can see this through here. That's a very important level, that 4480 level. I expect it's going to get there tonight. I suspect it's going to hold and it's going to knock back and going to fall back. I still think the correction is in place for a few reasons. One of the other reasons why I think it's going to fail is when we look at these RSIs. So this is just overbought on the 4 hours, right? Doesn't happen very often, right? Here, led to sideways actions. Here, it was a top. There, kind of went on for a little bit, quite a lot, and then it kind of turned. When we look at it on a smaller time frame, the 2 hourly, that's heavily overbought, right? That doesn't happen very often. When we look on the hourly, of course, heavily overbought. When we look at on the 15 minutes, overbought and showing some negative divergence, as in that's been coming down while the price has been going up. That looks a little bit potentially toppy to me. It might only pull back to this resistance before turning, right? But I do think that it is, for me, being short this, I haven't been short really since it turned near the top. I'm just going to stay short and ride it out a little bit. So we'll see. That's the US market, and I guess a lot of markets are like this. The currency, the Aussie dollar, similar story in how it's. You can see how it's broken the downtrend, but there is a key level here, just a little bit higher, where I expect it may well get to, but for me, until it breaks that, the short is still in play. And we can see also with the Aussie currency here, it's overbought, not as much as the equity markets, and you can see there's a little bit of negative divergence in there where the price is going up, but the RSI is going down. That's the currency market. So I'm still short that one. I mean, I've been short that since up here, right? So I'm still okay. In the Australian share market, similar thing. I mean, all these markets, they're obviously correlated. It's broken this downward trend, but it hasn't broken these previous levels yet. And the Australian market, you can see there again is a little bit of negative divergence with the RSI coming off, but the price action firming up. To me, indicative of a turning point. Could well be wrong. That's those ones. Gold has turned a little bit. you can see that's just happened just in the Asian time zone, and it was obviously heavily somewhat overbought, and it's come back and really wasn't able to bust through that $1,800 resistance mark. Its downward trend is still intact. Right? So we can see that one. It hasn't broken through yet. Surprising. I thought it was going to, but it hadn't. I do think a lot of these markets, they're kind of poised to come back to those previous breakout areas. Now, the thing that I do have my eye on, which I'm going to do another video about it, is you might remember, well, for those that have been paying attention, around about a month ago, I did a video and said it's all about the 17th and 18th, then the 19th, of course, where things changed. But you can see back in May, there's some selling on the 17th and 18th, and it finished and it came back on the 19th. Same one here, 17th and 18th, came back on the 19th. 17th and 18th, came back on the 19th. 17th and 18th, came back on the 19th. And here's 17th and 18th, right? And you might remember, I looked at it and said, look, there's these four sell-off here points, which were quite dramatic, in that they broke some moving averages. The 20s and the 50s, they kind of wreaked a little bit of havoc with. They broke the 20s and went down to the 50s. Okay, so you can see here, broke the 20, went down the 50, broke the 20, went to the 50, broke the 20, went to the 50, broke the 20, almost went to the 50. And then you might remember this back in the beginning of September when I talked about this. There's one of the things that actually triggered doing these videos in the first place, where I said, look, this one, so I did a roundabout here, I said, look, it's likely this is going to happen again, given that it's happened like 4 times in a row, 1, 2, 3, 4. If it happens a fifth, then it's different this time, because it will go through that 50 MA and it will wreak havoc, which is exactly what it's done. And you can see, really, like since then, despite the volatility, it's been a sideways chop, right? That has basically been the action. Despite the technical analysis, we like to read all these waves and trends into it. It's basically been a big sideways chop since that 18th and 19th, 17th, 18th and 19th action. Now, these dates, they are the 17th and 18th business days where there has been selling happen, and after the 18th, the seller disappears and the markets bounced back. Even this one bounced back a little bit. You can see there's no, it's just these past few months, like since May, right? So there's nothing in here, like in April, in March, not really, right? Not really at all. In February, nah, not really. In January, not really, nothing, right? It's just these 1, 2, 3, 4, 5 months. Now, I expect that, given it's happened 5 months in a row, for the thing to happen again on the 6th. So I'm just going to go through it in a little bit more detail here, and I'm going to do a separate video on it so you can see it more clearly. But this is what's been going on. I've just mapped it out. So this is back in May. You can see there's a 3% move over the 2 trading sessions, which were the Monday the 17th, right, and Tuesday the 18th of May. And by the close of business on the 18th, the little time scale here says 19th of May on the, but that's Australian time because I'm in Australia, so that actually means close of business on the 18th, and the next one is start of business on the 19th, and it's all back. So over 2 days, 3% drop, springs back. Okay. Then in June, similar thing where over the 2 trading sessions, which was the Thursday the 17th, okay, and Friday the 18th of June, there was a drop, smaller, 1.65%, but similar things took it through to the 50-day moving average. Then over here on the in July, it was the 16th and the 19th, right? Because the 17th and 18th was a weekend. You can see when those two trading sessions are done, the market really sprung back very quickly, just like here, okay? And in August, similar thing. It was like a 2.5% drop when those two trading sessions were done, and it was the 17th and 18th, the Tuesday and the Wednesday. So these aren't option expiry dates that some people have thought, right? These are the actual business days of the 17th and 18th. So the 17th and 18th, again, like a drop, 2.5%, and then it comes screaming back afterwards. Then in September, when it happened, it was a bigger one, right? It was like 4%. And again, it was over the business days of the 17th and the 18th, being the Friday the 17th, and then Monday the 20th, okay? And there was a big drop over those days, and it was bigger, as I said it would, right, because it was breaking these technical levels, formed like a lower low, broke the trend line that had been happening, through there, okay? You can see obviously it came back to where that trend was and then came off it again. And we are coming up to those days, okay? Now this weekend, it'll either be like the Friday and the Monday or the Monday and the Tuesday, because the 17th and 18th is the Sunday and the Monday. So it'll definitely be the Monday, which is the 18th. It might be the 18th and the 19th, or it might be the Friday, as in tomorrow, as in today's trading session, that the sell-off takes place. And this is a 3% block, right, that I've just put in as a marker, right? So it's basically like, 3%, which is where these moves have been in the past. 4%, 2.5%, 3.3%, 1.65%, and 3%. So call it 3 around about the middle. So that's where it could take it down to, and you can see it'll take it towards the bottom of the range that we've been in. So I am, and that's another reason why I'm short. I was right here, like I basically got short up here, because I saw this coming, and I'm staying short partly because it hasn't retraced those highs in here, but also because I see over some time out of the two over the next 3 trading sessions, either Friday and Monday or Monday and Tuesday, there's going to be a good chance, I said I could be wrong, right, of the same selling that has happened for the last 1, 2, 3, 4, 5 months. Now I can't work out exactly what's behind this. To me, it stinks of a fund having an asset allocation meeting on the 15th of each month. They speak to their traders on the 16th. They do the order. The 17th, the 18th, the order is executed. The 19th, they're out and the market recovers. Having worked in the industry, having worked in an investment bank, this seems a typical MO. The one thing that concerns me is when I've looked at the volumes around these days, there's nothing that really speaks to an outsized volume here. And maybe they're executing via derivatives or something like that, so that the volumes don't show up, which is a chance. I could do it via swaps, for example. I could do it via options. But in any case, in the cash market, there's not the volumes that I would expect given my hypothesis. Anyway, my hypothesis will be borne out, I would say, sometime over the next 2 or 3 sessions. If I'm right, the guys that have been doing the selling action here will be licking their lips for this rebound that we saw overnight, and they will be looking forward to selling into that. As I said, lightning doesn't strike in the same place twice, right? But when it strikes 4 times and then a 5th, I think there's a good chance it's going to strike a sixth time. So that's how I'm positioned. I do have some stops which are at these levels, which I've shown in the last few minutes. Anyway, I hope that's helpful. As I said, this is for education only. I'm not an investment advisor. This is my trading diary. Take care when you're mucking around in these markets. Be careful of who you listen to. I worked in the industry for over 20 years in all kinds of markets, currencies, commodities, fixed income like emerging markets, swaps, trade the books, run the businesses. And one of the reasons for doing those videos is I really get pretty cynical of some of the people that do these market commentaries and technical analysis who seem to be wanting your money to sell you training courses, which I think is a joke, or guys that have conspiracy theories about Wall Street and their option strikes wanting to take money, which is rubbish. I just want to give you a straight down the line look at how I see the markets and the positions that I've got on. I hope that is useful. Let me know. Catch you later. Ciao.